Ladies and gentlemen, buckle up, because the global economy is hitting turbulence. We are in the thick of a rapidly intensifying trade storm. Reciprocal tariffs. Countries are locking horns, slapping retaliatory trade duties on one another, and the effects are rippling across continents. While these measures may serve short-term political goals, make no mistake, the economic impact is real and it's hitting home. Let's start with with the United States. These tariffs are driving up prices for everyday Americans. Businesses that rely on global supply chains like tech, automotive, and construction are scrambling to adapt to rising input costs. And for American exporters, the situation is even worse. Retaliatory tariffs from trading partners have choked demand for key sectors like agriculture and manufacturing. Sure, a few industries, steel for example, might see temporary protection, but the bigger picture is clear. The United States economy is losing its competitive edge, and consumers are footing the bill. Now zoom out to the global stage. Internationally, reciprocal tariffs are dragging down growth and rewriting trade routes. Export-driven economies in Asia and Europe are reeling from weakening demand, especially from the United States and China. Some nations are scrambling to redirect exports, but it's messy, inefficient, and costly. Financial markets are jittery. Investor confidence is fading. The World Trade Organization, struggling to hold it all together. What we're seeing is a rising tide of uncertainty that's shaking the global economic order. And which United States products are caught in the crossfire? Almost everything. Agriculture is being hammered. China has slapped tariffs on wheat, corn, chicken. Our farmers are paying the price. The auto industry is under siege, with motorcycles and vehicle parts hit by the European Union. Canada's gone after our steel and aluminum, and even our iconic bourbons and whiskeys, now more expensive to ship overseas. These tariffs are targeting sectors with deep economic and political roots in the United States, a deliberate and strategic response from our trade partners. Let's talk numbers. The latest round of tariffs is expected to shrink United States GDP by nearly 1%, with unemployment potentially jumping from 4.1% to 7.5% in the coming year. Analysts predict the average household will pay an extra $3,800 a year just to keep up with inflated prices. The economic impact score, a chilling 3.49 out of 5, landing squarely in the severe recession zone. The total cost, an estimated $600 billion, plus a 5-year road to recovery. And China? They're feeling the heat too. The US just slapped a brutal 54% tariff on Chinese goods. Their export volumes are plunging, foreign investment is drying up, and their manufacturing sector is under intense strain. GDP projections are sliding below target and unemployment is rising fast. China's economic impact score, 2.6, still in the severe range. Their cost, roughly $400 billion, with a 6-year recovery in sight. So, are we in a trade war? We're not just in it, we're neck deep. The United States and China are engaged in an economic tit-for-tat that threatens to spiral out of control. This isn't just tariffs. This is a full-blown standoff that's disrupting supply chains, rattling markets, and stifling global growth. We've been here before in 2018, in the 1930s, even during the Napoleonic era. And history teaches us this. Trade wars don't end well. They sow economic division, stoke political conflict, and if left unchecked, they can escalate into something much worse. So, what can we do? How do we prepare? For individuals and families, it starts with being smart. Rework your budget. Stock up on essentials before prices rise. Buy American when you can. Cut back on non-essentials and build up that emergency fund. Times might get tough. For business owners, it's all about agility. Audit your supply chain, diversify your sourcing, secure inventory ahead of price spikes. And above all, communicate with your customers and stay flexible. The game is changing fast. And for investors, this is your moment to think strategically. Diversify across sectors and borders. Lean into recession-resistant industries like utilities and consumer staples. Consider hedging with United States Treasuries or gold, and don't panic. Stay committed to your long-term strategy and lean on your financial advisor to help stress test your portfolio for the road ahead. Here's the bottom line. Reciprocal tariffs are not just headlines, they're shaping the future of the global economy. But with knowledge, preparation, and resilience, we can navigate through the uncertainty. So, whether you're an investor, a small business owner, or just someone trying to protect your household budget, now's the time to stay alert, stay informed, and take action. The storm is here, but together we can weather it. Stay informed. Like and subscribe.